Hi everyone, I am Adam. Good evening and welcome. It is this week's Midweek Market Focus. It is Wednesday, the 4th of February. So very quickly, we're going to have a look at a market overview, what's happening, what's moving, what's not. We're going to focus then on number 2 on our agenda, which is markets that are focusing on which are providing the highest probability of success if we trade in the same direction. And then finally, a question that tends to come up a lot and especially might be sensitive to what's going on in the world today is, how do you know if you are in a bull or a bear market? And especially what I'm going to focus on, the question that I'm going to give you the answer to here is, how will we know when we flip into a bear market? How will we know when we come into a bear market or switch into a bull market? How do we change between those? And, is there a way in which we can use indicators and technical analysis to give us confidence in being able to figure that out? All right, so that being said, let's move on and have a look at the charts. First one here is euro dollar. All right, so what's important about this at the moment, if we go to the weekly, for example, is you can see that actually the euro dollar here managed to break out of the range. Friday, the US dollar had a very strong day, and we can see that it almost knocked the euro dollar back. So the question this week is going to be, are we back in the range, or is it going to find support where it is? I was hoping to have an answer for you by tonight, but unfortunately we're going to have to wait until Friday. So if by Friday we manage to close up with a nice green bar, we reject this level, that is very good, because it implies that next week we will continue to see this head higher. On the other hand, should we fall back well within the middle of this range by Friday, it means we're stuck and we haven't managed to escape. But I want to just point something out to you. A couple of the other majors against the dollar have managed to do that. We've got Aussie dollar, it's managed to pull back and it continues to strengthen at this point. We've got a little bit of an indecision candle at the moment, but it's still looking quite good. And actually that leads me very quickly to point out some of the Aussie pairs are offering some really good trends at the moment. Here's Aussie yen. It's very interesting because we know, as you know from my previous episodes, the Bank of Japan is really trying to reverse the direction of the yen pairs. Doesn't really look as though it's happening just yet. In fact, we can see if we look at the yen pairs, for the most part, they are just continuing to head higher. Here's Aussie yen, there's Kiwi yen. They just continue, and that's a daily chart. So the weekly charts are still, if we just switch it over to weekly, they are still heading higher. And that isn't just exclusively those. We can have a quick look at some of the others. So we'll bring in euro yen. Let's just let that one load up here. Euro yen is going still to the upside here. Let it load up the price action. You can see consolidation off a nice level of support, continuing to push high. If we bring in Swiss yen, what is Swiss yen doing? Okay, let's just wait for the price action. I thought all the data was going to be loaded up this evening. My apologies. Let's have a look here as well with CAD yen. For the most part, my point is this, is that none of those trends are ultimately reversing. Look at this. Even so on the weekly chart, we can see for the most part, these are continuing to trend upwards, even with the chaos and the noise. So the yen pairs are continuing to move in the same direction, and therefore they are quite attractive from that perspective. But let's just go back to the markets. It's kind of a general look at the markets where we are at the moment. I'm going to quickly pause this and just load up all the data. I'm not really sure why this is giving me issues. Okay, so let's go back here. Let's have a look at the pound. So again, we can see that last week with that stronger dollar rebound, that kind of knocked everything back. But the important thing to note is that if you have a look at euro dollar, it's been stuck in a range for a while, as has the dollar index. And the dollar index is actually back in the middle of its range, whereas euro dollar has actually managed to stay out of the range up until now. If we then move across and we have a look at, say, GBP, we can see a similar thing happening here. We've had a strong uptrend. We're still not really back. There is no real range here per se. If I had to frame it, I would frame it like this, and we're not really there at the moment. So there's very subtle hints. This is what I'm looking for this week, is to see if we find support in this area, and by Friday we finish higher. This is a daily. We've got the 50, 20, and 10 in a bullish formation, and this would be the same analysis that I would apply to the Aussie dollar against the US dollar, the euro dollar, and the Kiwi dollar against the US dollar. We've got price pulling back in our bullish candles this week, or today I should say. We had a bearish engulfing bar. And so that's where the battle is. That therein lies the rub. The market is attempting to decide whether it's going to ultimately finish stronger against the dollar or weaker against the dollar. So please also don't be surprised by this. This is just the nature of things at the moment. This is the new normal. But the end of the week, I hope, will give us some clarity on this. If we see this ultimately finish and we see that dollar weaken, what this tells us is very important. It tells us that some of the majors are starting to uncouple from the US dollar, starting to stray away from it. So even though the dollar index itself isn't really doing much, some of the majors have decided to just keep on going. And so that is important from a big picture perspective. So Aussie dollar as well did pull back, started to break up, then today had a bit of a funny day. So today the US dollar won today's round. It is odd because we have a nice trend and we're sort of bucking that. Let's see where the week finishes. That's why I say it's important. So then let's have a look at some of the other pairs. So we've got Aussie yen over here as well. And actually some of the other Aussie pairs have been catching my attention. If we move across, we have a look at, say, Euro Aussie. Let this one load up. You can see here we've got a beautiful trend. So Euro Aussie, this is moving mainly because the Aussie is driving it. Looks very good. Nice bearish candle here breaking down, starting to slow down a bit. If we move it across and then compare it to, say, Euro Kiwi, because Aussie and Kiwi pairs can often do the same thing, we've got a similar downtrend here. Possible level of support. The market might ultimately come back and provide a shorting opportunity this week or early next week. Really like the look of that. Let's compare this again to Pound Aussie. So you can see here there's some correlation between a lot of these pairs here. This is Pound Aussie. Very, very nice trend at the moment. Looking pretty good. And then let's go and have a look at just some of the Aussie pairs. So what's happening, for example, with Aussie Swissy? Is that trending up? I would expect if the Aussie dollar is doing well. It's very choppy, but you can see the flow over to the upside. What about Aussie CAD? Is that moving up? And again, Kiwi CAD and Kiwi Swissy will be doing similar things. So just pointing out that some of these markets are actually moving, and this is important because April, May last year and parts of the end of last year, because of tariffs just halting kind of global trade, a lot of the markets, the currency markets, kind of failed to go anywhere. And just because of all that uncertainty, gold and silver took off, and because of kind of wealthy, a lot of money and tax cuts and various other things, we saw the indices take off. So whereas now what we're starting to see is a lot of the currency markets are indeed actually starting to move. Interestingly, we can see some movement towards the Swissy pairs. So we're starting to see some downtrends within Euro Swissy. Very tricky to trade, but definitely still happening there. Let's have a quick look and see if CAD Swissy's maintained its trend. Pound Swissy and Aussie Swissy, quite a few of those continuing to do that. So my point is just this. We're seeing some moves towards Swissy, which is relatively a bit of a safe haven currency. Yen pairs are maintaining their carry trade at the moment. I do expect them ultimately to change, but that could be months away. It sometimes does take a while. It's a huge amount of money, and there's a lot of that money sitting in stocks as well, so it's reluctantly relinquishing that position. So that would be with regards to currency pairs, the dollar not offering a lot of clarity, Aussie pairs looking quite strong, and the real thing this week is, will they start to uncouple from the US dollar? And that would be historically significant, so I'd pay attention to that. But the point I really want to make here is that there actually are some potential trends starting to form the currency markets. And if you are a relatively new currency trader and you've been trading over the last year, you would have found currency trading brutal. And the fact is, it absolutely was brutal, but it was brutal for everyone. And if we start to see things starting to move away here, this would be amazing. We'd start to see some trends coming back into the markets, especially with some of the other pairs. And this is very premature for me to say this, but it does actually mean there could be some incredible opportunities down the line. I'd love to see that, because back 10 years ago when I was early in the game, that was normal. That was standard. Okay, so that being said, let's kind of move across, have a look at what's going on with the indices. Okay, so the US indices here at the moment, just looking at this, we're still range bound, relatively bullish bar on the weekly here. Okay, so the Dow here looking nice and bullish. Quite happy with that. It's still bullish. Like, it's been chaos, especially if you go to the daily. This has just been garbage to trade. You couldn't trade this successfully. You just couldn't. It's impossible. But I'm just trying to point out here that it's still bullish. It's at a nice consolidation. And actually, I think next week, if this changes, if this closes the way it is now, next week, it's going to carry on up. Let's have a look at the S&P for comparison. So we are largely in a range here. The blue box here shows that we haven't done anything for quite a long time. Let's just see where that is. That puts us back in November. Okay, we've been sideways, it's been garbage, but the overall trend has been going up. So that means that if you're a swing trader or if you are a day trader, it's been terrible. But if you've been an investor, it's been fine. Okay, so it just shows you the difference. And that's not always the case, by the way. So if you're an investor and you're going, and you're laughing at this, I'm telling you that's not always the case. There's usually a bit of something for everyone, but not at the moment. Not at the moment. It's just chaos. So day traders and traders, and I think speculators are starting to leave these markets. They're starting to pursue other markets. We'll have a look at those in a moment. Now, this is range bound. So what does this mean? It means that highs and lows have they're just out of control. So here you can see you go from a high to a low, then a lower high, but then a higher low, but then a higher high, and then a lower low, and then a higher high, and then a lower low. So it's just all over the place. No clear trend. Go to the weekly, get a sense of this, zoom out, get a big picture thing. This one not looking that good. Very interesting. The Dow looks good. The Nasdaq looks terrible. So the Nasdaq, I think, is probably going to be, if there's going to be a deeper correction, Nasdaq's going to lead it. That's going to be the one that pulls it. Dow seems like it's going to be doing okay. Let's leave the US and have a look at some other stuff here. Look at the FTSE. It's having a killer time, man. All-time news. This is the daily. Beautiful consolidation breakout. Looks really good. This is where it is today. Still looking relatively nice, and I think there's still some good opportunities there. Let's have a look at Euro stocks. Wait for it to just reload. I just suddenly thought it's a bit... let's just check that it is there. Consolidation. But let's have a look at it from a weekly perspective. Weekly perspective, actually, again, really not looking that bad. Nice pullback, bullish candle, continuing up. A little bit of resistance in this area. What about the Nikkei? What about Japan? Beautiful ascending triangle, breakout, still bullish. The wicks top and bottom, ladies and gentlemen, is due to volatility. So if we go down and we just look in this area, we go down to the lower time frame, you'll just see wildness. You'll just see this chop and change, a lot of swings. Okay, so that again is coming from volatility and uncertainty. And there's two kinds of volatility. There's two kinds of volatility. So we need volatility at its, in a good way, means movement. We need movement in the markets to make money. Then, of course, there's negative volatility, which is just noise. All right, and that's what I mean. That's what we're seeing here. When you see small bodies, wicks top and bottom, what's happening is that on the lower time frames, it's just like a nightmare. On the higher time frames, it's ultimately closing higher, it's moving, but you wouldn't want to trade it. Hang Seng is a bit of a failed breakout here, so I think it's probably going to come back in the range. But the real question is, will it manage to maintain this ascending triangle? That's kind of important. So if it does, good, it'll continue to the upside. So now let's have a look at commodities. What's going on with gold? So we finally let off some of that buying pressure. We finally let some of that buying pressure off. We really needed to do that. We've gone parabolic, so this is gold going to the upside. But I don't think that the fundamentals that are causing this bubble, which is global uncertainty, geopolitical tensions, I don't think they've gone anywhere. And so I don't believe that this bubble will really go away until some form of certainty comes back. And so what I see this as was a medium term or shorter term release of that pressure, because it was unsustainable. So the bigger problems haven't gone away, and this was a bit of like, the market's not rational at this time, right? It's acting out of fear in most parts here. And so we see the sell-off, which we needed, so it let go of some of that buying pressure, and it's recovered. And so this is important. You've got to understand that it coming back here let off quite a lot of the overvaluing that it had, brought it back down, and now it's recovering again. So for me, depending on how we close, if we close with a strong bullish green weekly candle, I think it's very likely to attempt to resume the trend. And actually what it kind of tells us is that the very fact that it could let off some of that means that we are not done yet. So long story short, the bubble is not done. We are still in a gold bubble and a silver bubble. We're still in it. The bubble only bursts when you see a complete devaluation. What we've seen here is just letting pressure off, just like this. This is a nice consolidation, carries on. This is just a strong correction. And I got to tell you, overall, the momentum is still bullish. So we are still very strong on gold. We're likely to see it attempt to carry on up, but this kind of will slow the market down, which actually means that the bubble could still be intact for another year or two. We'll see. We'll see. We'll know when it's starting to burst. We'll know when that's going to be the case. I would actually say that if we continue and we close bullishly like this, we'll know when we break this. So if it carries on up for where it is here, if we ever see it drop suddenly and aggressively below this point, boom, that'll be your confirmation. Silver, again, weekly. So again, for silver and gold, for me, it's very important that they close green. If they close green, then a break above the high is a continuation back up to the old highs, or at least an attempt to go back up to the old highs. But this is huge. This has let off so much buying pressure. And if you're a Fibonacci measurement, look at this. Look at how beautiful. I mean, it's just the colors here are shocking. Let me just change those quickly. Here we go. Look at this. It's amazing. This is very healthy. I don't know how to tell you this, but within a bubble, this is a pullback into this area here, which is the 382, the 618. It's found support to the 618, closing up higher. It's looking good. If we close higher by Friday and we break the high, we're going to keep going back up. My point is this. You can see the candles getting bigger. You can see a massive correction, and you can see it recover relatively quickly and with no real difficulty. And the bubble hasn't burst. Okay, so it means that the market is, it'll attempt to go high. Maybe it'll go into a bit of a sideways consolidation like this for a while. But that recovery, that strong, and that's why I say it's important to see how it closes by the end of the week on both of these. That is going to be your clue. That's going to be your clue that it ain't over yet at all. Right, let's move on to crude oil. Crude oil is coming up here. This is a key level here. So this is a $66 level. If we go back to the daily, that's really what we're looking for. We're going to see that is it able to break through this? It's pulled back. It's produced a bullish candle. It's trying to go up. This is really the key level. So if we close above 66, we're then likely to see it move quite a bit higher. Let's just go back up to the weekly so I can give you that very next level. The very next level sits us actually around about the $80 mark. I know it says 78, but it's closer to about the $80 mark. But this is a strong level. So let's only deal with that if we get past it. You can see here it's a very strong level of support. We'll see if we ultimately get past it, but that's really what it's trying to do. It could fail if ultimately we could find it carrying on back down. Let's carry on back down. So That's essentially it for most of the markets at the moment. As I said, the best trends tend to be right now gold and silver, believe it or not, but I would wait this week and pick them up again next week. If you're more experienced, you may be looking at the lower time frames, back down to the 1 hour and 4 hour. We had some incredible stuff today. So silver provided us with some really good stuff here. Have a look at this. Silver had some predominantly a nice uptrend here. We had the 4 hour also looking quite good over here. We had a nice little uptrend. So these were trades earlier today. The daily itself also trying very much to turn around, but this is not an uptrend. We've broken series of lows. So what you have is you have a monthly uptrend, a weekly uptrend. You don't have a trend on the daily at all, but then you have a 4 hourly, 1 hourly, 2 hourly, and so on uptrend. Okay, so it was looking pretty good, but it's important because if they do ultimately close back down, then we haven't really changed anything. So by this time next week, I'll be giving you an update on that. But I'm just saying if those weekly candles close to the upside, they look pretty good. And I like them. With the indices, again, I'm still preferring to stay away from the US indices for now. I would watch how the Dow versus the Nasdaq closes. So the Dow's looking really good. And if it closes nice and bullish, that's great. And if the Nasdaq closes really bearishly, a lot of that will immediately kind of tell you what the state is of the markets. It'll tell you that it's AI and various other things, and the market's losing a bit of faith in the overvaluations of a lot of the tech companies in the enthusiasm of AI. But it doesn't mean that the market itself isn't already generally bullish otherwise. And it's always been bullish. The AI has just been an extra layer of activity on top of that. All right, so that brings me to the topic for tonight. Big part of tonight's topic is how do you know if you're in a bull or a bear market? Now, the beauty of this is that this is where technicals will beat fundamentals, hands down, all the time, every time. It's got bits of real Panther in it for the reference if you guys know that. So this is one of those things. Okay, so let's go across. What we're going to do here is we're going to look at certain criteria. I'll give you some of these. I've personally got a list of about 8 or 9 proprietary criteria, but these ones are really the ones that will, for you guys, are the things you need to take advantage of. So these are key technical criteria for how we determine if we're in a bull or a bear market. And there's 2 reasons why I want to tell you this. One is I want to go and show you what our current market state is. The second reason is because when the markets turn bearish, there'll be we'll know when that happens, and ultimately, as long as they remain like they are now, we're in a bull market. And it doesn't matter what you hear in the news. It doesn't matter what you're hearing in the media. The media is garbage. They're terrible at telling you this stuff. They really are. I've never known over the last couple of years to have the mainstream media consistently fail to bring professional content and opinions to people. There's a couple of individual talented people out there, absolutely, but generally, by and large, they're just not where you look to find your answers. And so they tend to go for the clicks, right? They go for clickbait and kind of clicks, and so they go for what creates the most drama. So what we're going to do here, first of all, we're going to look at the weekly chart. You look at the weekly chart. Why do you look at the weekly chart? Because the daily chart can be, 5 days can seem like a lifetime, and it can be incredibly choppy, as you've seen on the S&P. When you zoom out and you go to the weekly, what happens is you do get some perspective, but you don't have to wait very long to get it. You can get a sense of what's going on just every week, and that's really good. If you go higher than that, then you start to only be able to know what's going on every 3 or 4 weeks at a time, which is too high up and doesn't really help you. It's not practical, it's not useful. The next thing is you need to be looking at price action. All right, so if you are getting higher lows and higher highs, I'm going to show you this. We'll go to a chart. If you are getting higher lows and higher highs, the market is trending up. Okay, if it's giving you mixed highs and lows, it's going sideways. And if it's giving you lower highs and lower lows, which again, we'll go have a look at, then you're in a downtrend. All right, and then finally, this is where the 50 SMA shines. This is really where the magic is. So ultimately, if we're on the weekly chart and price action is trending up and it's above the 50 SMA, I'll show you this on a chart in a moment, we're in a bull market. It doesn't matter what else you think or what else you're hearing, we're in a bull market. If we are below the 50 SMA and the price action is producing lower highs, lower lows, we're on a bear market, and it doesn't matter what you're hearing. Okay, here's the thing though. The market never goes below the 50 SMA and produces a downtrend and has people going, we're still in a bull market. It never does that. By the time it does that, everybody's very aware the market is dropping. But people fail to understand that when it's above the 50 and it's trending up, that's where they don't understand what's going on. So let's go to the charts and let's have a look at this. So first of all, we'll go to a weekly chart. Let's go through and have a look at this. Where is my baby over here? So again, here we go. So we've got the 10 and 20, we've got price. Let me bring up that 50 quickly. Let me just do that. So we've got a red 50 here, that's a traditional color, and we can actually see the prices operating above it. Okay, so what does it mean? Well, by and large, this is the tariffs coming in. Okay, this is tariffs coming in. You can see that shocked the market. It's very similar to when COVID came out. Big surprise. And actually here we broke through these lows. So this is a big thing. We start to break through the lows here. It caught the markets by surprise. They managed to recover. They're back above that 50-period moving average. And again, if we are still producing by and large higher lows and higher highs, we're definitely in a bull market. So if you're watching this and you're going, yeah, but there's all this terrible news and all this stuff and all these things, it's got to fall down, it's got to collapse. You know what? Go back 10 years, go back 15 years ago. There's always stuff in the news that always sounds like the roof is falling. And the mainstream media, again, have become addicted to trying to escalate stuff, to increasing the drama. They want it to be a soap opera because then they get views and that's how it goes. But it doesn't mean that we don't necessarily have problems, but what most people forget is that the markets are driven, especially the indices, are driven by spare cash. This is what people forget. This is not jobs. This is not jobs. This is not growth. This is tax breaks and spare cash, money people can afford to do without. This is pensions. This is not jobs. This is just sheer cash being invested for growth. That doesn't mean that it's completely unconnected to the market, but really it kind of is. This is money that people can afford to do without. And so it gets stuck into the markets, and you've got all these valuations. You've got a lot of very wealthy people, millionaires, multimillionaires, billionaires, putting all their money into the markets. And so you've got the market rising. And so you need to understand the big money ultimately moves where the returns are. And so what you're looking at here is not the economy. It is interest in companies and ideas and what can happen. And that's a reflection of this. And how far price is above the 50 also gives you a really big indication of how much we are in a bull market. So could we, how will we know? Well, when we drop below that 50, that will be the very first clue, because also then you start to create lower highs, lower lows. And so you get the drop below the 50 and the lower highs, lower lows, and that's how you know it's changed. We are very far away from that. So even though the market has started to go sideways, ladies and gentlemen, we are still in a bull market. All right. And even if you didn't buy that, let's just go outside that. Let's have a look at the Dow. So go to the Dow. This looks amazing. Look at the 50, 20, and 10 fanning out, series of higher highs, high lows. Look at this current weekly bullish candle. This is hugely bullish. This is like ridiculously bullish. So again, let me just repeat this. You're sitting there going, I'm listening to the news. I'm watching what's going on in America and they're executing citizens and it's absolute madness. How is the market going up? Because first of all, the market is made up of rich people's money and pensions and mutual funds. It's made up of money you can afford to live without, so you put it into the markets. It's made up of ETFs and it's made up of all that kind of stuff. It's not made up of jobs, okay? This is really, so when you see this, you need to understand something, ladies and gentlemen. The 1% own more than 50% of everything. So at least 50% of this is literally just the 1% driving the market. It's not jobs and it's not company performance. Okay, so let's just be very, very clear about that. It won't always be that way. There is going to be a reckoning, but we will start to see it. It doesn't happen. It's one of those things that maybe happens very slowly and then all of a sudden. But point is, markets are still bullish. Let's move away from that. Let's have a look at some of the other markets. So this is the DAX. We go back to this, look at it from a monthly perspective. It's trending up like crazy. Germany's having one of its best times ever. Spain is having an incredible time. We go have a look at Eurostox. Eurostox looking incredible, very, very bullish. Non-US markets are actually looking better than the US markets. Even the Nikkei, as I said, if you go away and you have a look at the Nikkei, that's trending incredibly well. So these markets are having a very, very good time at the moment. Okay, so that's the thing. So that's kind of, I want to just kind of wrap this up for now. Once we start to change trend on the weekly here, going to lower highs, lower lows, and we cross below that 50, then we can start to call this a bear market, but we're not there yet. And something else I want to talk to you about as well is that it takes a while for that to happen. It takes a while for it to turn around and go up. It takes a while for it to actually tend to go this way. And there's two types of market corrections. There's the one we see coming with raising interest rates, okay, hiking interest rates, and the markets, and everybody sees that, they start rotating their cash out of stocks and they start moving it into other areas. And then there's the surprise shocks. There's the COVID, or maybe in our future, maybe there's a bird flu pandemic, and that's a shock, or tariffs. And that stuff comes and it's unexpected and the market has an immediate reaction. So these types of events are faster, and then they assess them, and then they either don't like them or they do like them. Or they're slower, where we start to see a rollover. Okay, where we start to see a little bit of a rollover. I don't have enough history on this chart to show you this at this time, but when we've had raising of interest rates and Russia invading Ukraine, we ended up in a bear market. This is more like a bit of a spook to the market, but Okay, so the point is, let's wrap this up. Right now, we are still in a bull market, ladies and gentlemen, and there's a very real possibility the markets could go sideways or up until the end of this year. Remember that it like time goes by so quickly. We're almost, we're in February right now. It's going to be Valentine's Day soon. And that's it. We'll be like a quarter of the way into the year. And before you know it, we're going to be 3/4 of the way into the year. So, and it's been so quick. Okay, so let me leave you with that. I hope that you found this instructive and useful, and I want you guys to have a great week. Always trade responsibly, always trade with stop losses, always make sure you take profits as well, okay? And I will speak to you soon. I hope you found this useful. Thank you. Have a great week.